Oil just surged toward $110 a barrel. Gas prices are climbing again, and this could be the early warning sign of something much bigger. Because every time energy spikes like this, it doesn't stay in the markets. It hits your wallet, your groceries, your rent, your daily life. So the real question is this just a temporary jump or the beginning of another global shock? In a sudden move, global energy markets jumped. Brent crude oil surged more than 5%, briefly nearing $110 per barrel. At the same time, natural gas prices in Europe climbed sharply. Now, a 5% move might not sound massive, but in energy markets that's huge, because energy doesn't move slowly, it moves fast. And when it does, it sends signals that traders, governments, and economists take very seriously. Energy isn't just another commodity, it's the foundation of everything. Every product you buy, every mile you drive, every light you turn on, all of it depends on energy. That's why when oil and gas prices rise, the effects ripple through the entire economy. And unlike other markets, energy reacts instantly to fear. So what caused this sudden spike? It comes down to one word: uncertainty. Right now, global markets are on edge. Geopolitical tensions are rising, supply chains are fragile, and even a small risk to oil production can send prices higher. Here's how it works. Traders don't wait for a crisis to happen. They react to the possibility of a crisis. If there's even a chance that supply could be disrupted, prices move immediately, and that's exactly what we're seeing now. But here's where it gets interesting. After the spike, prices pulled back. Why? Because markets often overreact. In the short term, traders rushed in, prices jumped, and then profit-taking kicked in. Without clear evidence of an actual supply disruption, the market cooled down, at least for now. But that doesn't mean the risk is gone. How this hits Americans. If you're in the US, this matters more than you think, because higher oil prices don't stay in the headlines, they show up in your daily life. At the gas pump, in airline ticket prices, in food costs, even in your electricity bill. And here's the key: energy drives inflation. When energy goes up, everything else follows. That's why central banks watch oil prices so closely. Because one spike can undo months of progress in controlling inflation. Inflation isn't just about money printing, it's about costs. And energy is one of the biggest costs in the global economy. If oil continues to rise, it could slow down interest rate cuts, keep borrowing expensive, and put pressure on economic growth. In other words, this isn't just an energy story, it's an economic story. So what happens next? There are two possible paths. If tensions rise or supply is disrupted, prices could surge even higher. But if things stabilize, the market could settle down again. Right now, we're at a tipping point. But one thing is certain: when energy moves, the world reacts. And this story is just getting started.